a bit. So all of this and lots more lined up for you over the next 60 minutes.
But that's Kickstart Trading Hour by putting the spotlight on the new kid on the block. The IPO of Tracxn Technology opens today. So just a quick word about the company. Now, if you want to make an investment into a listed stock market, all the details are available. You know their quarterly numbers, you know all the key indicators, the key metrics, the KPIs that the company reports every quarter. But if a VC company or a private equity company wants to make an investment into another private company, the details are not available. So this company, Tracxn Technology, provides market intelligence data for private companies. And this it will provide to its customers on a subscription basis. Now, if a private equity investor wants to, say, make an investment into an edtech company, what will he need to know? He will need to know some M&A targets. He will need some deal diligence analysis. He may also want to know what the competitive landscape is looking like. So who its competitors would be, what would their market share look like, not just in India, but even globally. Or even if a private equity investor or a VC throws a question that tell me which are the emerging market themes across industries, all that data for private companies is provided by Tracxn Technology. Now, about the issue per se, it's looking to raise about 300 crore rupees, but this is a pure offer for sale. There is no fresh money that the company is raising. This 309 crore, which is the IPO size, it will be raised by the promoters and some of the key investors like the Flipkart, founding family, Axel Investment, Axel Partners. They will be selling their stake. 300 crore post issue. Once it's listed, its market capitalization will be close to about 800 crore rupees. Neha Singh, the chairman and managing director of the company, now joins us on the show. Neha, thank you very much for that. First question, why is the promoter and why are some of your old investors selling in the IPO right now? What's the rationale? And do you not need any fresh money? Could you tell us the reason why the company has not opted for raising fresh money? What's the cash that you have on your books?
Thanks, Rima, firstly for having me. If you look at the financials of the company, we have last quarter was profitable. We did a positive PAT of 4.5%. Also, the other thing that you can see is that there has been a non-linear EBITDA expansion across all these years. So just last year, for instance, 78% of the incremental revenue that we added went directly into the bottom line. Right? In addition to that, the company has also been generating free cash flow, which has been increasing across the years. Like last financial year, excluding the IPO expense, which is reimbursable to the company generated 5 crore of free cash flow, whose run rate has increased to 5.8 crores in the first quarter of this financial year. And for the same reason, though we tend to be very aggressive in terms of the growth, a lot of the future growth has been able to finance with the cash flows that the company generates. Right? And that is the reason why the offer is OFS, because if you raise primary, you have to expense it in the next 1 to 2 years as per regulations. And the business also is not a very heavy capex requirement that you need for the growth of the company. So we are able to sustain a lot of the future growth through the increasing cash flow of the company. That is also, I think the office is also testimony to the fact of the sort of business model of the company.
All right. Hi, Neha. Good morning and thanks for joining us. This is Pavitra. So you're saying that there's no real need for you to raise money. We take that point. Can you also, take us through, like Rima was pointing out, why are you looking to sell this? Why are the promoters looking to sell this stake in the company? That's one. And also, like you pointed out yourself, the company has just turned profitable last quarter. So wouldn't it be advisable to wait for a few quarters and then, come forth with an IPO, or why so soon?
Right. So in terms of the holding, so the promoters will continue to be a larger shareholder. So we'll continue to own more than 35% even post IPO. Also the investors who had invested in the company when the company was private will continue to own 26% of the cap table on the post IPO basis, which includes investors like Mr. Ratan Tata, Seabright, Venus, who will continue to hold on to their investment. On the second part, which is what you mentioned, that yes, we have turned profitable, but if you look at the trajectory of the company, that has been fairly linear. So if you look at the EBITDA expansion across the last 4 years, that has been fairly linear. For instance, in the last 3 years, our revenue has increased at 30% CAGR, while the cost has only increased at 4%. Also, the other interesting thing is that because we do prepaid collection for the entire subscription period, the company has been cash flow positive for the last 1.5 years. And that has also been increasing. So if you look at just the last 12 months, we increased the team size by more than 150 people, primarily adding people in the sales and marketing functions. But all the growth that the company has been doing, the free cash flow that the company generates has been able to finance that. And I think the other interesting aspect about our business is that we also enjoy the cost arbitrage. So we make in India. So all our team is based out of India, but we actually sell globally. So 70% of our revenue is international, primarily USD. So through that, we also enjoy a long-lasting sort of cost arbitrage which exists.
Okay. Hi, Neha. Morning. So until last year was the first year that you have made a profit, right? But the way we understand is that, incrementally, you don't need to keep adding capex. Your highest cost would probably be a wage bill or marketing expenses. So what is the reason that for, the years before that, you were making losses in that region of 400 to 500 crores?
Yeah. So if you look at our business, we are a global private market intelligence platform. For the first 5 years of the business, you have to invest a lot in building the technology platform and building the data, right? Which is the reason why we had also raised venture capital funding of 113 crores from various private market investors, as well as angel investors like Mr. Tata, Nandan Nilekani, founders of Flipkart, Delivery, etc. Right. And so the first 5 years, I would say, was in building the technology, the data platforms. We work with customers globally. So we work with private market investors, large corporates across 50 different countries. Right? If you look at in the last couple of years, most of the incremental expansion and the growth has gone in the sales and marketing functions. For instance, last year, when we increased the headcount by 150 people, bulk of the team size got added in the sales team. We also have a very interesting sales model. Like our sales team is actually based out of India, but they sell to customers globally. So they work across all the time zones, working with investors across Japan, Europe, North America, etc.
Okay. Also, by the way, I erroneously mentioned that your loss is 400-500 crores. I meant 4 to 5 crores. Subtract the zeros from there. My apologies. Neha, now that you're saying that last year 70% of your revenue has flown directly to the bottom line, can you help us in terms of what is the trend that you're seeing in terms of your margins, etc.? What is the headroom that you have for expansion?
Yeah, so that is a very interesting aspect about the business. Even if you look at companies which are selling data to public market investors, these are fairly cash-rich companies, right? Because once you have built the initial investment in building the data and the technology platform, the cost to serve incremental customer is very minimal, right? And that is why if you look at, we have had a non-linear EBITDA expansion across the last 4 years, which has been sort of fairly consistent across all the years, right? We hope to sort of continue to building on this trajectory of EBITDA expansion as well as free cash flow expansion.
So what would your gross margins be right now, Neha?
So we haven't given the gross margins in the prospectus, but it is fairly high. Even if you look at the public market data companies, their margins are fairly high. And a good proxy of that is how much, if you look at our revenue and the expense trend, like the last 3 years, our revenue increased at 30%, while the cost only increased at 4%. So we are able to serve a lot more incremental customer base by not increasing a lot of costs.
But can you give us an approximate range of gross margins, and can it expand from here on?
Yeah, so it is fairly high. Like I was saying, a good proxy is 78% of our incremental revenue, which we added last financial year, actually went into directly into the bottom line, right? So you can expect sort of that profile of the company to continue.
Okay, Neha, just one final question. The total addressable market is expected to grow around 12%. That's what we gather. Can you tell us, do you expect to outperform the industry?
So currently the market is fairly deep. Just in terms of numbers, the private market asset under management crossed $9 trillion last year. If you just look at 2021, VCs and PEs invested more than $1 trillion across private companies globally. And currently we are actually at less than 2% of the overall addressable market. So we see a lot of room to grow and, sort of decades worth of growth in front in this market.
You're saying that you are right now able to cater to only 2% of the addressable market?
Yes.
Okay.
That's correct.
Okay, so then as you need to expand your database, include the repository of companies, will you not need to make substantial investments? And will that not hurt your margins? Because the whole, the reason you said that the company was loss-making in the prior years, because you were building that database, you needed to make those investments. But as you make the investments so that you can expand your addressable market share, will it not continue to keep your margins depressed?
So interestingly, what happens is that the initial 5 or 6 years, you spend a lot in building the technology infrastructure, building an analyst team, building a data operations team and processes, which is what we had done in the journey of the company, right? Like if you look at it, we today have 800 people team, which is based out of India, which has a large team of sector focus analyst team, a 80-member technology and product team, as well as a large data operations team. So the first 5 years of starting the company, you have done a bulk of the investment in these functions. In the subsequent year, you can actually leverage your investment in the data that you've built by selling to additional customers. So that is why you've seen actually the profile increase, becoming better. Your profitability actually has actually become better over the last 3 years in a fairly linear manner.
Okay, Neha, we'll leave it at that. Thank you very much for joining in and wish you all the very best and look forward to more interactions with you. That's Tracxn Technology, the new kid on the block. Slip into a very short break on that note. On the other side, we'll come back and talk commodities. Manisha Gupta joins in as always.